saying that they were interested in equities was well south of 6% in the previous quarter, that is the second quarter of the year. Charles Chaw joins us from Shanghai. He's the author of the book, Fund Management in China with China Knowledge. Charles, welcome to the program. People in China seem to be feeling better about the stock market. How much of the gains in China that we've seen in the past month or a couple months have been because of feel-good factors, and how much has been because business really is getting better?
No, it's not about feeling good better. Feeling good, it's all because of China Securities Regulatory Committee, push up a series of measures to improve the market. Since the low of June the 6th, it came down to 1,000 points, and from there we see the rebound, until today about 20%. Now, measures like, for example, allowing non-tradable shares to be tradable. This is something very fundamental, very important to improve the market sentiment. And what do I mean by allowing non-tradable shares to be tradable? In the past, the management will have not really accountable to the financial performance. So whether investors wanted to buy into stocks, most of it, 2/3 of it, are non-tradables. So allowing non-tradable shares to be tradable will make the management, the CFO, the CEO more accountable to the financial performance. So that is a very good benchmarking. And for the past few months, we see increase of 20%. That is a healthy sign, and that is the main reasons for the increment.
Let's talk, Charles. Let's talk specifically about the Treasury issue. The non-person shares. They were locked up for all these years, and now the companies are starting to have to deal with it, which is a good thing. I mean, it had to come sooner or later. They're coming up with plans for supplemental shares, for bonus shares, as compensation to people who might be diluted as a result of this stock making its way onto the market. But come on, let's talk about the sheer number here. We're talking about $240 billion. We're talking about $250 billion US. Is there that much household savings in all of China to soak up demand for these stocks?
Bernard, there is about $1.5 trillion of saving, and that poses to be enormous opportunity, whether as a stockbroker or fund managers. And looking at the opening up of fund management, and we see banks like ING, HSBC, Deutsche coming in to tap onto the market. $1.5 trillion of savings. Now, an attractive part about the China financial market is most of the investments are individual investors. So there's a lot of opportunities for fund managers to come in to tap onto these investors' funds.
What if the Chinese have been doing as much as they can to attract more foreign participation in the market? So the QFII scheme they've been padding it and adding more, raising the allotment for companies. How much of that money is actually deployed, however? Because my understanding of the issue was a lot of this money initially went in waiting for a revaluation and a subsequent re-revaluation of the yuan. It was more of a foreign exchange play than it was a positive equity play.
One hurdle for more foreign investments to come into the stock market is obviously the renminbi, which is still pegged, and the float is just within 5–6%. That is a big issue. And another thing is the central government of China does not welcome speculative money. They don't want to see funds coming in and leaving the stock market. So at this point, they're still playing safe. So the QFII, so-called Qualified Financial Foreign Institutional Investors, is come up to about 30 of such license. They are able to invest into the A and B shares. So in short term, maybe the coming 6 months to 1 year, I don't see a lot of drastic increments of foreign funds coming to the stock market. But I'm seeing a lot of play within the fund management company coming in early with the first early entry advantage to brand, because I think foreign brand has an advantage in terms of fund management. Let me give you some statistics.
Charles?
About 100, yes.
Charles, sorry, we'll have to leave it at that. We got to make a quick break for a commercial. I appreciate your time, though. We'll chat further about this issue in the weeks to come. In the next half, we'll focus on Singapore Focus Week on this Friday.